You're listening to The Builder's Mindset with Mike DiGiovanni, presented by Amazing Mindsets.
Welcome to another episode of The Builder's Mindset. And if you're watching, hope you like the flamingo shirt. If you're listening, thank you both. Thank everybody. We really appreciate you supporting. We're just having so much fun doing this. And we're going to have a short episode this week. And we're going to talk about when price increase requests clash with price reduction requests. Why do I say that? Well, my good friend Michelle Skeldon and I, in a couple weeks, are going to do a webinar together. Basically, it's geared for trade partner subcontractors on how to best navigate asking your builder clients for price increases, legitimate price. How do you manage them? How do you handle them? How do you get into them? How do you present them? And how do you get the best chance of success? Why do we feel we need to do this? Well, with all the talk of tariffs, which are all the rage right now, along with everything else, let's just be honest. Inflation has been insane the past couple of years. It's finally seeming to start to steady out, but still north of 2%, which is, if you listen, that's usually the Fed target. But I don't know that we've had a month that's been lower than 2% in 2 years. I could be wrong on that. Don't quote me on that. But trade partners are feeling the pinch. And let me tell you what, a lot of my clients are trade partners, and I work with them. I get under the hood with them. We look at ways for them to reduce their costs, reduce their overhead. Their costs are not coming down. The large manufacturers and large suppliers are holding steady, whether it's because of their inputs, tariff issues, all kinds of stuff that is going on right now that a lot of trade partners are feeling the pinch on their margins. Their margins getting compressed. They're feeling the need for price increases. And what's interesting is that they're feeling that in a time when, as we've talked about in previous episodes, the bidding is just now starting to pick up. We've kind of been going through 3 to 6 months of very soft bidding. Builders are finishing out communities. The end of communities are coming. We've seen that if you look at any of the stuff we talked about in any of our earnings reports. Last year, the builders were having a tough time getting communities open because they were in sort of this lull. We're coming out of it now, but as we talked about, from October 2022 when interest rates hit 7% through kind of March of 2023, there was not a lot of land deals, relatively speaking, that were being done. Because of that interest rate, builders pulled back. And so we're kind of working through that 6-month window now of where those deals that should have been getting done from October 22 to March 23, we're in that 6-month window, shift forward about 18 months or so. We're in that window now when those would normally be going out to bid for vertical construction, house costs, bricks and sticks like we call it. And we're in that window. And so a lot of trade partners are seeing also last year, builders were at accelerated sales paces. I believe most of last year, Lennar's sales pace absorption, average sale per community per month was over 5%. They're now a little bit, I think for their first quarter, they were 4.2. But with that accelerated sales rate that a lot of those builders were selling more homes, they were incentivizing, so their margins were getting pinched because they were having to incentivize to get from 3 to 4 sales a month or from 4 to 5 sales a month. And the reason they were doing that is because to meet their numbers, they had to sell more homes per community because they weren't opening as many communities. It's amazing what 6-month window, October 2022 to March 2023, and the decrease in land deals that were executed in that window of time is creating a lot of different factors that are impacting the home building industry right now. It's kind of like you talk about, if you're on a freeway, let's say like in LA, you're on the 10 freeway, if you're in Florida, you're on the I-95. Yes, I just said the 95. It's don't hate the Californians that we say the in front of, and it's really just a Southern California thing. There's a reason for it. I should do a whole podcast on why Southern Californians say the in front of all their highways. But if you're on I-95 or you're in, I'm trying to think of which one, I-75 I think goes through Atlanta, or if you're on the 10 in Southern California, if you're on the 70 in Denver, and it's rush hour traffic and somebody hits the brakes on their car and almost comes to a complete stop, they say that there's studies that have been shown that reverberation, that you will feel that for 15 to 30 minutes after that incident. And so just like that, when home builders slow up on their purchase of land, you will feel that for that window of time, but it doesn't come until about 18 months later, because that's usually how long it takes those to come to pass. At least on the vertical construction, the bricks and sticks side of things, which is where we like to focus. So we're in that window now. We're coming out to the end of it. And what's happening now, though, is a lot of trade partners are getting nervous because they're seeing some of those communities are finishing, where the accelerated sales were happening. Those communities are starting to finish, and there's been not a lot of bids to go out. It's starting to pick back up. And so they're feeling the pinch. So they're feeling the pressure to lower their costs. Listen to any earnings call. Anyone, pick it randomly. They're usually, most of them are available. Or just go pick, you want a random picking, go to the websites of any of the major, any of the top 20 builders, go down to the bottom, look for investor relations, look for presentations, and you'll be able to find some of them post their transcripts and the recordings of their earnings calls. Listen to them, and I challenge you to tell me how many of them talked about in their first quarter, fourth quarter, third quarter, how many of them have been talking about their home costs, the cost to construct, because Wall Street expects them. If they don't talk about it, you'll go into the Q&A, and then it'll come up in the Q&A because they get asked. Listen to what they have been saying about their direct costs, and listen to what they say they need to and plan to do going forward on their direct costs. If you want an easy one, go listen to Lennar's. If you can only listen to one earnings call in the home building industry per quarter, listen to Lennar's. And why do I say that? Because they do a great presentation, number one. A lot of admiration for the machine, which is what they refer to it as. And they tend to, in my opinion, like we say, you've heard saying, so goes California, so goes the nation. I feel like that about Lennar too. Like if Lennar does something, a lot of other builders kind of have to follow suit with them because they are so big, they're so large, and they're so aggressive with their strategies, and they implement them top down. I affectionately refer to them as the Death Star because it is not, there's not a whole heck of a lot of local wild, cowboy stuff. It's like they run a tight ship, and if they're going to do something, it comes from the top, it goes down. And so when they report stuff in their earnings calls, most other builders have to respond in some way, shape, or fashion. So recommend you listen to that. They're talking about how they use their scale to get their costs down, both on the supply chain side, both on the trade partner side. And so what that happens now, as I mentioned, the trade partners are feeling like they got the pinch coming from all the material costs and inflation of the last few years. They're still not getting the margins that they really wish they could get. Let's be honest. Everyone in the home building industry, in my opinion, did rather well in 2021 and 2022. 23 is when we started to see the margin erosion begin. 24, it really started to materialize. And now here we are in 2025, and the clash of the Titans is about to begin. And I think we're going to see a lot of trades partners and subcontractors are needing to ask for more money to maintain their margins, or to get them back, at least moving in the direction towards where they historically were, what they need. And builders, because they're continuing to have to incentivize buyers to buy houses to combat the affordability issue, which is double whammy by both overall costs as well as interest rates. They're feeling the pinch as well. And you could see that in the earnings reports. They need their costs to come down, okay? The home builders' margins finally really starting to see it in this first quarter that's coming out and reporting right now with Lennar, Toll, and KHAV. If you look at theirs, they finish their year, Lennar a month earlier, KHAV and Toll 2 months earlier than than the calendar year. So we're starting to see the margin impact hitting builders. It's thereby hitting their stocks. So be prepared that they are going to get aggressive, in my opinion. It's begun in some areas. I've heard some stuff coming out already. Builders are going to be getting very aggressive about trying to figure out ways to get their costs down. Trade partners, on the other hand, are wanting costs to go up. That's why I'm calling it a clash. It's like they're on the opposite ends of the spectrum. In 2008, I was working for a builder at the time. We had a community. I believe I rebid that project out 3 times in a year in a 12-month window. And every time I got my prices to come down. Why? The economy was so in free fall that we were in a deflationary position for the most part. I mean, everything was coming down. Home prices were crashing. So thereby costs were coming down. We don't have that right now. What we have for the most part is home prices maintaining. We're starting to see signs of that breaking. This will come out when you see it. And if you listen to the podcast that I did when I did Lennar's first quarter as a preemptive kind of look at what's coming down the pike, and then I also included some data sets in there from Toll and from KHOV. Those are the ones that have already reported their first quarter numbers. The average selling price for a Lennar home was down 1%. Tolls, I believe KHOV was down about 4%, and Toll was down 7.7%. So we are finally starting to see house prices come down a little bit, but here's the tricky part. Those house prices are coming down because those builders are making base house price adjustments. They're also giving incentives. They're buying down mortgage rates. And so you have builder margins that are being compressed. Trade partner cost inputs are not really coming down. There's a little talk, and I've heard a few instances of labor actually giving back a little bit. That's a whole other macro issue that I have issue with. I don't like it when we reduce our costs by reducing labor, because I think that's where we really, once again, holistically look at everything. If we push down the trade labor is a good, decent paying jobs that help fuel the economy, in my opinion. When we push down the trade labor rates, what we pay for the labor, we make it harder for them to buy groceries, clothes for their kids, school supplies, improvements on their home. We make it harder for them to own a home because now they're making less money. I prefer when we get the cost of the inputs down, or when we redesign our product to make it more efficient. But so where we're at right now, the big clash though, is trade partners' margins are pinched. I've seen it firsthand with my own eyes. I have a lot of trade partner clients. Builder margins are down. You could see that if you just look at the publics. You can look at their numbers that are coming out. Their margins are starting to come down. And I think if you looked at, and we'll put this in the show notes, you can get a copy of our summary earnings report for the public home builders. We did fourth quarter as well as 2024 full year analysis. And we have some data in there where we talk about where the builders were, gross margin first quarter to gross margin fourth quarter. And most are down, some surprising. I think I reported Taylor Morrison was actually up a little bit. Kudos to them. They're doing a great job managing their costs and their operations. But most everybody following the market and what's going on are down. And so we're seeing home prices decline slightly, but not a lot. And so we don't want to put undue pressure on the buyers. This is where all these dynamics are coming in. So we have on the labor side and on the cost input side for material, we're still seeing elevated prices. Builder margins are getting pinched, and so they want their costs to come down. At this point in time, the last line of defense builders have is their direct cost. They can't change their land basis because they're unfinished lots right now. So there's that clash, and something is going to have to give. I'm not betting anything on this one. I've put my thing out there where I said I believe that from a closings perspective, 2025 will be plus or minus 2% over 2024. I'm not making any bets on what's going to come to pass in terms of overall cost to build. So when we start looking at the Q1 2025 data cost to construct a home, and then we go fast forward to Q1 2026, I'm not making any bets on whether it's going to be up, down, or what. I think it's going to be flat. I won't put any money on that though, but I think it's going to be flat because I think that clash is going to come to we're going to leave things where they are. The trade partners are going to take a little bit of risk of, hey, I'll hold the pricing where I'm at for the year. So they'll take a little bit of risk on the future potential cost increase that might come to them, and they'll agree to hold there. And I think the builders give will be, we want numbers to come down, but we'll take it where it is and we'll leave them where they are. So this comes back to what I've been saying to builders for the longest time. There are other ways. One of my favorite division presidents that I've worked with in the past, he liked to say, it's not all about the cost, but most of it is about the margin. There are other ways to improve your margin than just reducing your direct cost. And everybody knows my favorite, product design specifications. Go work on that. Go design a better product that is more efficient. I understand that takes some time. So when we're looking at this year right now, what can you do this year? There are still things you can do operationally. All of the builders are talking about pushing their cycle time down. Have you looked at your schedules lately? How is your field supervision? Are you running a good job? Do trade partners want to come work for you? Is a trade partner willing to give you a 1% discount because of just who you are as a builder? Do you have an opportunity right now because you're a smaller builder and you've been working with the same trades over and over and over again for the last few years? Is this an opportunity to go out and really consider talking to them about, hey, we run a good shop here. You get a lot of our work. And we feel, we're going to give you an opportunity to see if there's any areas on your end where you can get a bit more competitive so we don't have to go out and bid. And you know who you are. And this is the other thing. I think builders need to be honest with themselves. If you are a well-run builder where trade partners get in and get out and make their money. If you're one of them, you've got some leverage there, in my opinion. Also as a builder, if you're not a very well-run builder. If you are, it's really hard to ask for a price reduction if you're difficult to work with. Now flip over to the trade side. If you're one of the best trades out there in your category, in your market, and you need a price increase, it's a much better position to be at, right? If you're one of those trade partners, so when I call up the builder and say, hey, I need a 2% price increase, and that builder says to you, you're on 5 of my jobs, and you're consistently late, or you consistently don't finish, it's kind of hard to ask for more money if you're not given the baseline quality of service that you need. So all of these factors come in. It's not all about just the bid and the direct costs right out of the gate. There are other ways to be more efficient, to lower your overhead, to lower your costs, and to be that preferred who has something to offer the other party, whether it's what the builder offers the trade partner offers the builder. Think about that. Really, really think about that. The clash is coming. I believe it's going to be interesting the next 2 quarters, quarter 2, quarter 3. And then my overall other prediction will be is that if the builders continue to find a way to keep sales at 4 homes, 3.5 to 4 homes a community a month going forward, I think they're going to make up their volume in 2026 by having more communities open because they're coming. And I think we're going to again see the labor is going to get stretched. So we've talked about it. We're riding, I think we're 1.3 million. I've discussed this before. The system, in my opinion, currently can handle 1.3 to 1.5. If we get over 1.5 million starts per year, the labor starts to feel the strain. And then what does that do? Supply demand changes for labor to labor available to labor needed. And we start to see upward pressure on that labor cost. And as well, that will follow suit with materials as well. So that's where you have it. I think we're in for a big clash the next 3 to 6 months. In the show notes, we will put the link for the training for subcontractors that Michelle Skeldon and I are doing. We will also put the link if you want to get a copy of the earnings summary that we just put out for Q4 and the full year 2024. And hope this was of some value to you. It's going to be an interesting, wild ride for the next 6 months. Buckle up. Let's have some fun. And remember, keep your mindset in the right place. Go build some houses and have an amazing day.
You're listening to The Builder's Mindset with Mike DiGiovanni, presented by Amazing Mindsets.